Greetings, market rebels. Welcome to this week's macro measure. It's Friday, October 10th, 2025. It's about 3 p.m. here on the East Coast. I'm Wayne. This is combined with the sector situation video we've done for so long. It's going to be one of our most brief ones. We're trying to get this out before the close. Here's a trustee disclaimer from Market Rebellion. Here's a trustee intellectual property rights notice. Here's last week's sort of abandoned format. We called it "Damn the Torpedoes," left some things in place possibly for future use, not using them this week. And we've got "Damn the Torpedoes Plus," which really got into what we covered. And basically that got updated briefly here where I got rid of it a little bit. But let me just say that we're going with this week with signs appeared. But what that means is started seeing signs, discussed those somewhat yesterday morning in a webinar that we had for UOA Pro, and was hoping to cover them on cocktail hour before the market deteriorated, not knowing it would, but just before it did, in case it did. And unfortunately, it started before we got to cocktail hour. So I'm trying to get this out before the close. I just think it's time to be smart and hedge. You can do that with in so many ways. We've been talking about owning VIX call spreads. I've still got those on. I had spreads on, but I uncapped them. So now they're just simply a bunch of long calls, and I'm just letting it go for now. It's obviously getting wild and woolly, like we had said. We had mid-channel issues again this week where we almost got there and just didn't make it. And then things took this turn. We're going to talk a little bit about that. But again, I want to just remind everyone, we've been talking about roll. When you get vertical and some of these crazy moves we've had, and I think I covered this yesterday in the webinar, I took a lot of what I've been in for a long time that's been based on big picture charts that have really made tremendous moves, and I still think there's potential there. But I got out of all the longer dated stuff that's a lot more costly with a lot more heavy delta, maybe like over 90 delta plus at this point due to the runs they've had. And I just got out of that and I played short term, smaller, much lower delta, much less capital tied up, and then even got out of some of that because I just decided I did not like what I was seeing in this market. And I always have that reminder in my mind, rather get back in right than be sorry. So I just don't know if everyone feels that way. Depends on your style, but as somebody who probably would be classified as hyperactive, having been a market maker and a desk trader for so long, we're probably tend to be hyperactive compared to a lot of people. Anyway, so we saw some signs. I handled it that way. Shared it yesterday. Hope was hoping to get some of it on cocktail hour. Covered a little bit of it today. I want this out before the close, and that's where we're going to leave off. So I'm just going to stop the share. We're going to just try to get some things made clear. And this way, if you think some of this matters, you may be able to make some adjustments if we can get this out. Unfortunately, things are happening so fast that it's becoming problematic that I don't even know if it's going to matter. And I don't know where Zoom is right now. Zoom is boy, they're moving. The Zoom has kind of disappeared on me, so bear with me. Let me get that, and then we'll do the share on my screen 3. And I'm hoping just to do this for 15 or 20 minutes, so please forgive me. But here's the look. This is part of what I shared in cocktail hour. You could see this candle. You could see the channel we've been operating in SPY for the longest time that we discussed. You could see how it was approaching earlier in the week, starting to approach the mid-channel line a little bit, getting up there. Probably see it better actually in the Q's mid-channel line where it was getting up there, and then has just failed to get there. And then you have this big turn. And so this is happening across the board. You've got IWN, the diamonds, of course, they're all generally fairly well correlated. But of course, when you go risk off, which I think you have, you definitely get you get this kind of synced up move. And one way I would say that you can see that we're going risk off is by the view on the sectors. The view on the sectors here, and this is kind of frustrating and disappointing. But again, that's why you're in a very dynamic market. You've got to, I think, be disciplined, do these things even when you don't want to. You just do certain things like rolling up when things become really extended, so that you don't give so much back. You go out to a meeting or something today, and you could have given quite a bit back. A lot of stocks have really gotten battered, but just take a gander at all the risk off. I mean, the only sector really that's not rolling over at this point is probably XLP out of the traditional sectors. XLU, a little different story because it can be seen defensively. And of course, people believe that the demand will be there given all the developments within the economy, especially obviously within tech. But really, right, the story we were hoping would start to develop has been essentially snuffed out. The energy market rollover, financials rollover, transports rollover, right? Even things that are defensive that were doing better, like XLV, that's rolling over. It had really good performance last week, stalled out. You can see real estate rolling over, right? Everything, the former leadership areas rolling over hard. So this is risk off. This is what we saw in this as well, because what happened to we're supposed to be seeing the 4 lot here. There it is. Yeah, so IWM was one we were really hoping we could get this thing going because we think there's so much potential there. But a lot of you probably know we've left it out of the videos. There's a lot of stuff out there that's making a pretty good case that Main Street is not really seeing this, right? What Wall Street's seeing and the way Wall Street's been behaving yet. Now, hopefully that'll change, but sometimes, right, as we've heard so many times, oh, the market's 6 to 9 months ahead at least, right? The market's always looking ahead, looking ahead, looking ahead, but it just wasn't able to power and go. Now, this doesn't mean it's completely over, of course, but this to me, this kind of a break, you have to take seriously. It's a very big sell-off, right, in one particular day. You've got key things like the SMAs and the Qs. The 20 there in blue got cracked. That usually opens the door to obviously fibs and other points of interest like the former highs, which happens to dovetail right near 583 in the Qs. But that's also just about where the 50 is, which I'll cover a little bit more. So that opens the door to there. The door to the 50 is possibly open in the spiders as well. That's right near about 651. You've got the 50 down here in a support line in IWM, which is actually holding up relatively well, all things considered, right? Given the way that it has behaved, but it's cracking. The diamonds are out ahead towards the 50, if you will. They've already cracked and they're almost there. And as we speak, the VIX, which I did uncap my spreads when I saw this start to develop, I saw that market reaction and just found it on X what had happened real quickly. And then I just said, you know what, this thing's moving up. I was actually about to buy my short calls back for cheaper than I sold them, but I couldn't react as quickly as I wish I had. And then this thing started powering up. So this is a pretty strong move. Clearly, right, we've seen where they will wreck this thing very quickly. So it's probably a little risky for me to just do what I'm doing, but I think sometimes you just have to go for the gusto. I was having a really great day until this happened. And I, luckily before it did, the way other things were happening, I made adjustments. So that leads into this part of the discussion where, and I covered this really yesterday in the webinar, because I like to jump in more when things, and I've got the time obviously, but also when things are dicey, because I don't like to see people work really hard to build up the profits they do in UOA Pro, especially, but of course other services as well that people are also a part of, and then give a lot back. So I just started noticing, right, that this higher cluster higher low was put in place at the end of last week, excuse me, and this thing started powering. This, of course, is the dollar index. And so that was a little bit of a change, right, from what we've seen. And remember, virtually the entire time that the dollar has been, getting hit since the spring, it tried here. Here's early May. That's really been it. That was probably the last really big rally attempt, and they tried to break the 50, rolled over, nothing. So this thing's really been hit hard. Suddenly, right, it started to change. And then I was looking at things like the JNK, which I'll cover this. This is your high yield bond ETF, and this can be a canary. And this really started serving as a canary technically for me, especially when you combine with the dollar moving up. You're like, okay, people are selling off the junk bonds. That's usually kind of a sign of concern. This also happened in HYG, which is the high yield bonds ETF. And so you can look at them as somewhat similar. And you can see that started happening there as well. So I actually have a bearish idea in the OA Pro service on this one. it's not a big mover, unfortunately. We had to go in the money, and it's dropping, but it's just not a big mover. I think I have an algorithm set up to make an adjustment for me if it drops to 79.45 to get me out of my probably 90 something delta puts at this point and into something that's more closer to probably about 45. But anyway, the point is this thing's rolling over too. That's an area of concern. You all probably know what's happened in the metals markets. And this is why I'm trying to get this video out, is quite honestly, it's not just what's happening in stocks, but there's all kinds of reports that Ryan's been coming across with respect to these exchanges literally in full panic mode. There could be, I can't confirm these, of course, so you're going to have to check your own news sources. Go to X, see if you think there's some legitimacy, veracity to these things. But we've been waiting on this for several years, and this has been an incredible run. And I told everyone, I was starting to sort of just chill out a little bit on my exposure. And then as I got lucky, frankly, because I started doing really aggressive things literally the last couple of days before this, and just said, I've got this sense that this has gotten, I'd rather lose very small at this point. And a lot of this had to do with the stretch. Like, this is just, even if you think there's something that's about to go vertical here, I just decided in most cases that I've ever traded, the stretch was so great here on this kind of a move, and not just in XAU, that I'd rather just get out and then have low delta calls with very little money tied up in them, and then get out of the heavy delta stuff that I was in, and not even be as really large in terms of contract totals and all that, which was just fortunate, right? I didn't have the sense that this Trump tweet or whatever you want to call it about China was going to set this off. But when the markets start looking vulnerable, right, that's when stories can be used to hide behind. We've said it a gazillion times in these videos and webinars over the years. And even if you think it's an overdone thing, it provides cover for things. Now, Jamie Dimon's back with yet another Jamie Dimon type thing. I think I might have one little browser window up here. No, that's not it, unfortunately. But there's a Jamie Dimon thing that came out, and I'm pretty sure he was talking about that. Let me see if I can get something over here for that. I'll just pull it from another window, and let me see where that is. No, I'm getting a little bit of difficulty here, but let's see. So there's also this factor, BLS, to published CPI. Oh no, that wasn't it. No, this wasn't it. So BLS, Ryan has seen something that there's going to be a jobs number essentially that gets published today, late after the bell. And so that is part of the mix the rumor is that could look really bad. The other things that I kind of abbreviated, now we have to go back to, are that there's serious problems in precious metals in terms of so many are requesting physical delivery, and it's the price of certain metals are trading higher in places like China and other places relative to where they are in, let's say, the Western system. So that there's some real stuff, crazy stuff you don't see that often, that could potentially monkey wrench everything. So that's why I'm getting this out there. Because if that really causes some major seize ups or problems or insolvencies and it starts spreading, and I know probably most folks have seen that there were sudden sort of insolvencies in certain companies and all kinds of financing arrangements, and that's how this stuff gets started. So I just wanted to highlight the fact that, right, we are seeing risk off. It's been a long time. Seasonality being what it is, we talked about it. Something should happen typically between September and October, and then it usually gets cleaned up, except for when you get major crashes. But most of the time you get cleaned up by the time OC is over and you're on your way into November, and then things start to really work and behave better, and you end up having a solid finish to the year in most cases, especially if you're having as good of a year as we were. and there's this big story and all these people are becoming obsessive. But Jamie Dimon's warning about a crash, 30%. I'm sorry I couldn't find that. The public participation has apparently gone nearly off the scale. The buy the dippers have just went haywire in terms of never losing for months. So there's a lot of things out there, and the possible monkey wrenching of the financial system if this silver squeeze or gold squeeze, or call it the precious metal squeeze, gets worse and really triggers the failure of certain institutions and institutions that are connected to those institutions, and so on and so forth. So Jamie Dimon's been making a habit out of saying these things, but he really came on strong with this 30% thing sort of this week. So I'm not saying Jamie Dimon's infallible. Clearly, he's not. I'm just saying that he really went at it again after, at risk of really being, the banker that cried wolf, because he's been doing this. It seems like the past few years, and we've been really in a bull market now for nearly 3 years, I guess completely. So this area is backing off as of right now, but let's get into the big pictures on these ETFs. And, as I said, I've got some fibs that I put here on SPY for us. And I think, right, to me, like your next really big, not that you can't stop at the 654.43 level. I mean, I think there is support there and there's a fib there. It's not stout support, but you kind of have this sort of double bottom. You've got a little action over here on a few candles to work with. So that could be clearly could be a stopping point. But yeah, I mean, news coming out after the bell, rumored to be Trump with news conference at 5 o'clock, coming back to the White House. Who knows what that could be? Again, this is not a pro or con comment with regards to Trump. In a webinar earlier this year, it was taken that way. All I've been saying is that Trump is Trump, and I would expect Trump to make news, because my personal take on it is Trump is not bashful about making news. He likes to make news. And so this is why we have had these tape bombs at times, and why I left that reminder on the slide for so long, because Trump is going to be Trump. I mean, that's for better or for worse, through thick or thin, whatever you want to call it. I don't think Trump at this point is changing from being Trump. So anyway, there's your 50 right there. The next levels down are you're probably going to have to say 651-ish is your 50. I would always bid a little in front of there, so go with 652. That's not even a percent away. Probably right. 646 is probably a little bit of a level, just ballparking it in there. And then your next level down on your fib is the 70. I think it's the 78% retracement. That's going to put you at about 643. After that, it starts getting a little sketchy, where the 100 sort of comes in and maybe dovetails. But I think there's a decent chance to drop at least a little bit further. I don't know what's going to happen here. You could see that the volume was sort of drying up. In other words, that kind of I don't know, underwhelming sort of trading that just kept grinding up. I looked it up, and I saw someone's comment that maybe it was the 2015, 2011. We haven't seen that kind of like sort of just boring lack of a 1% day in the market for that long. I think you had to go back to maybe like here or here to find one, and that's not typical. And it just had this really strange feel. I just couldn't put my finger on it. Low volume. Now you can see the volume pick up here. So it seems like some people are taking this fairly seriously. The VIX is at 2131 as we speak. You can see, I think it's exceptionally clear that the market is going risk off right now. Oh, if this even lasts until 4 p.m., I don't know. Okay, but let's just go back. Those are your levels on SPY. I don't want to belabor that. Probably Qs would be the next most important one. I want to make sure this video renders and gets out, just so people know. And then you're looking at your 50. That's going to be about, call it 583. So another 10 points down right on your QQQ. From there, I think that's a good level. I mean, I think from there you're looking at probably, I mean, that 583 is a really good level. So I would bid a little bit in front of that, if you're covering your shorts, so to speak. The next one down from there, wait a minute. How come that? It looks like it took it did. Okay, that took my fib away. But anyway, I'm going to stick with that level, because I do think it's an excellent level altogether with all the various points around it. So even 583 might be a little too low to bid. Maybe you're going to have to bid 584, somewhere around there, just to be just in front of this, just in case you get that little dip. Remember, a lot of times, even in a bigger sell-off, they'll have the initial plunge, save it, rally it up, put it in a lower high, roll over again. So that's why, right, you can always cover and watch, set alerts, and then re-enter. That's basically what I've been doing a ton of lately because of market conditions and the fact that we were still ramping on certain things and there was money to be made, but I didn't want to overstay my welcome at the same time. So I kept piecemealing it. Not the way you really want to trade, but when you feel like you're in a different vulnerable sort of time frame, the way we were with vulnerable conditions flashing, that's kind of what I do. So I just try to adjust to what I see. Anyway, the QQQ, the next big level down probably is going to be near the 100. I won't say that there aren't some fibs in here, but if you get below there, you're probably looking at the 100. Remember, I'm not going to belabor it, but you may have seen some pink ovals on the spies. There's a lot of gaps to the downside. The 50-day here on IWM is probably a big deal. We have a support line clearly there in orange. That's coming. We're coming into that now, but probably your 50 is your big level down from there. And then where would we go after that? I'm going to call it probably looking at about 232. So once you get through the 50 at 234.99, then I would look to about 232. And then after that, you probably have to look at 227. 227 is going to be the next level down. Yeah, that's a pretty solid level as well. And I'm just giving this to the upsiders. I really don't even have time to discuss because I want to make sure everyone takes this seriously. I don't want to screw anybody over, but I just in earnest want to share that if you haven't had time to look at all this stuff, you might get a chance to glimpse at it. But it's just we're going to just put out a little note like, hey, this is a concerning development clearly, and just maybe you hedge up. So you're at your 50 practically here in the diamonds, right? So next level down on that SMA wise is going to be your 100 at 445. And that's really just a couple of percent down. But I think this line I put in here earlier at 450 is also a good level. So I'm going to say it just happens to be round numbers, not that I prefer it that way, but I'm going to ballpark it at 450 and 445. So that's really going to be that. So, I would take it seriously. Final view. If there's some negative news that transpires over the weekend, all your major indices are taking a real beating. The volume is picking up in them. We haven't seen that in a while. Your sectors are getting hit. Virtually everything is getting hit, and you're getting into a risk-off situation. And you've got some really bad developments here, theoretically at least, with the China news that Trump dropped on social media that really seemed to spark this. So, again, I'd rather be safe than sorry. I'd rather hedge. You can calendar things, you can vertical things, you can diagonal things, you can go with a calendar that's very defensive if you're already way in the money. I love that. I love doing that. You can do all kinds of things. You can do risk reversals. You can sell call spreads and buy put spreads, whatever you want to do. If you're long a lot, you can put butterflies. You can buy VIX calls. You can buy VIX call spreads. Do a lot. Like the only reason why I'm not getting clobbered today, despite all my trimming, closing, etc., risk reduction, is because I went long the VIX, and that's just about it. If I didn't have the VIX on, I'd be having a pretty horrible day. But the long VIX trade has really been my savior today. So on that note, I'm going to wrap up. I'm going to wish everyone the very best weekend. Stay safe out there in this market. Stay safe out there in this world. And I hope that something I shared helps you today, even, and certainly next week, especially if we have some rough stuff. Everyone take care and roll, 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 trim, 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 hedge, hedge, hedge. Thanks for tuning in.